Good late afternoon, evening, morning, wherever you are. Welcome to the market strategy session for the week of February 8th, 2016. Of course, today is Saturday, February 6th, 2016. We're having a special session today because of the big game tomorrow where the Panthers, I think, destroy the Broncos. I think they absolutely destroy the Broncos. I think you can lay up to 7 points if you want to push, but of course 6.5 if you want to win. Keep in mind, I haven't been right about the Super Bowl in at least 5 years and probably more. Can't remember the last time I picked the winning team on the Super Bowl. So anyway, but I do like the Carolina Panthers. I just think that Newton is unstoppable. And I am the biggest Peyton Manning fan. Love him. Think he's great. Just think his better days are behind him. And I think Cam's better days are in front of him. Think he's going to be getting better for a little while here. Who do you like, Paul, in the Super Bowl tomorrow? I'm sorry, the big game, so we don't get sued by the NFL. Paul.
Yep.
Who do you like in the Super Bowl tomorrow?
I'm rooting for the Broncos, but I think the other guys are going to win.
Yeah, that's probably everybody. I agree. I think the Panthers kill them. I think the Broncos have the best defense, but it's too small. I think Newton is completely on a mission. And
But remember, defense wins championships.
Yep. Well, I don't know if you were watching the playoffs the whole way, but the Steelers, without their number one receiver and arguably the number one receiver in the league, Antonio Brown, had more yards on Denver in the first 3 quarters than any team had all year on them. So they are beatable. And, I mean,
I think the key for Denver is, to me, it's a 3-quarter game. If they can stay in it and not be blown out going into the fourth, then they got a shot. They're not going to come back against Carolina if they're down early. They're done.
Yeah, I think that one of the big fears of that Peyton Manning all these years, and I'm a big fan, I love him, was that you didn't want to get too aggressive on him because he never had an unbelievable arm, right? He doesn't have Eli's arm. Of course, he doesn't have Newton or Rodgers or Roethlisberger. That's not what he never had those. But he doesn't even have Eli's arm. He doesn't even have the best arm in his family, right? But now, like, I watch him and I say to myself, "Wow, is he like?" If Carolina gets aggressive on him and jumps those routes, he's going to have big problems. Now, he hasn't thrown a pick, I believe, since he came back. He may have. I keep thinking he threw one.
Yeah, but this is not Peyton. I mean, this is not Peyton Manning quarterback. This is some facsimile of him from 10 years ago.
Right.
They're going to be interlude on the defense, period.
Well, I just think, I mean, I can't see the Panthers not scoring 4 times at least. They're animals. It's like they are like an animal. I look at Newton and I see a freaking jaguar or a leopard or something. It's like you look at him and you're like, he's like a jaguar running through a bunch of cats, house cats. I mean, I'm like, he's unstoppable. I don't know, man. You know what? You're right.
Unstoppable.
What?
Nobody is unstoppable.
Nobody is unstoppable, but I just don't think he's going to have a problem. Anyway, So now on to the market. Let me go through these quick because there's a lot of questions for you already, Paul, and you're going to get bombarded today. I have a feeling, even though we have a lot of signups today, we only have 40 people live. So strange. We get a lot of people to sign up and nobody's coming. So it's just so, but I think we'll get people as it progresses. And I have a quick question for you too. So let me go through these quick. Mortgage delinquencies on Monday, just not really. It's rated an orange, but unless there's some really outlying number, it's not gonna be a problem there. The JOLTS job openings 10 o'clock Tuesday. Yellen speaks. Where's Yellen testifying? In front of Congress on Wednesday and Thursday? Paul?
I think every time I talk, I'm echoing on your end. I don't know.
You sound great to me, but some people are complaining you're echoing, but
You mute your microphone for a minute. All right, am I still echoing? No, I don't hear the echo. The echo is coming through you, dude. Now you can unmute.
all right, good for me. Well, tough luck. You'll have to echo for the whole 2 minutes that I'll be on here. All right, so Yellen, where is Yellen speaking Wednesday, Thursday?
Oh, me?
Yeah, where is Yellen speaking Wednesday and Thursday?
What month is February? I'm not sure.
Congress, right? If she's testifying, where would she be testifying?
Oh, I thought it was maybe it's the old Humphrey Hawkins test, the old Humphrey Hawkins before the House and the Senate.
Okay, so that's Wednesday and Thursday. Crude oil inventories are at 10:30 on Wednesday. They're now rated a red. They weren't rated a red for a while, but now, since everything is oil sensitive, they're now going to be rated a red going forward. Well, it could change, of course, but for now it's red. Unemployment claims are Thursday. On Friday, core retail sales and retail sales are both reds, and the preliminary University of Michigan consumer sentiment is also red on Friday. So you got to watch the red ones, especially if you're day trading during the day. All right, so now that's it. I'm going to hand it over to Paul in a second, but I want to ask Paul one question, and then I'm gonna mute it while he answers so nobody gets annoyed, and then I'm going to hand it over to him. A couple of times, Paul, you have said that energy is like 5% of something. What do you call? What is it? Is it 5% of the GDP, or I'm off there? I'm not. I don't want to say something completely asinine, but you said
No, I'm talking about what percentage the energy earnings are of the S&P.
talking one day about how high gas prices affect the economy. This is when gas was high, and you said no, that's not true because it's only 5% of. It was your argument of why it doesn't affect, of why high gas prices really don't affect the economy that much.
Okay. Now I know. Now I know you're going. It's because it was only 5% of the consumer's discretionary spending.
Why is oil beating the shit out of the market right now?
Two reasons. One is that lower oil, forgetting about the dollar impact, which it was clearly is not a big impact anymore, but one is because it is a leading indicator of global economic demand. So oil collapsing can be seen as a sign of a global economic slowdown. Two, lower energy or collapsing energy has to do with all the fixed income paper that has to roll over now by all those fracking and shale oil firms in the middle of the country that have borrowed hundreds of billions of dollars and have to now refi that paper. Either they can't service the current debt, which is a problem, or they got to refi at double the interest rate. So you've got a number of issues why lower energy is so bad right now.
Here's another question. What if, as some people are saying and attesting to that, there is a seismic shift happening now where oil is going to not be in such an influencer for much longer because we're going to different forms of energy and the fossil fuel argument and all that stuff. Like I read an article in the journal that said that 30% of these oil and gas companies are going to be bankrupt because of what oil's doing, and it could be as much as 60%. But isn't alternative energy and different forms of power being utilized more? Won't eventually oil be done anyway? Like, won't it be over anyway? What's your opinion on that?
So my opinion is no time soon will our dependence on fossil fuels decline. Yeah, it could decline at the margin, but I think it's so funny. They say this now. Oil was $147 a barrel 7.5 years ago. So now that it's collapsed, we're hearing that it doesn't matter. I totally dismiss it. Just like I dismissed when it was 147 that it was going to go to 1,000 because it was in such short supply and people needed it so much. I think we're at the other extreme now. I don't believe anytime soon, meaning not in the next 10 or 15 years, will our reliance on fossil fuels decline that much. So, no,
Barron said oil's going to $20. Is that going to happen?
How much?
$20. And all the other idiots are rolling out now claiming oil in the teens and blah, blah, blah. And somebody even said $8. But of course, that's probably more for shock value. But a lot of people are saying the teens / $20. What does that do to the market? Does that destroy? Because we're at 30 whatever dollars now, and the market's getting hit. What happens if it goes to the teens?
So first of all, as I said the last week and the week before, asking the guy who was wrong about oil may not be the smartest play. So I've said it. I didn't think oil would get down to these levels. Now the fact that everyone's lowered their forecast, I've heard a lot of people say $20 and upper teen oil. When you get into manic stages, whether it's in stocks or commodity, anything else, they always overshoot. So, and then as you're in that, cataclysmic stage on both sides, everybody begin to change their forecasts. I don't think oil goes to the teens. I think oil. I've said this for a couple of weeks that I don't think the bottom is in because of that nasty red candle. But I also don't think that we're going to go to 18, 19, $20. I do think oil sees its low in the first half of this year, and then it spends years, 3, 5, 7 years in a 100% trading range, working all this off until the dollar peaks. And then when the dollar peaks, around 120 on the dollar index, then I think oil begins another X year-long bull market. I don't think our economy is collapsing. I've said it for a while. Certainly, the economies elsewhere are hurting, and so I guess I'll surmise this, that the whole oil decline is really multi-pronged. One, clearly in the emerging space, it's slowing. So demand is not as great as it was in oil. That's a big one. We all know the Europeans' problems, and Japan is obviously another one. And then So that'd be global economic growth. And then you've got, technology has led to oil being produced at a much lower rate, which makes it easier to pump. So I think it's kind of multifold. And then I'll move on. I just don't think that all of a sudden the landscape is changing to oil and we're in this new paradigm. Anytime people say it's a new paradigm, it's the end of a move.
Yeah, that's what I think too. I don't think that we're going to just be totally stop relying on oil and all that. But again, I mean, anyway, finally, when I give it over to you, just please make sure you address all these bear market questions because I've never seen so many in my life. that
Okay.
People asking if we're in the bear yet. All right, I'm here, but I won't be. What are you calling it with you? So I won't be exchanging views with you, but I'm here. If you really need me, you may have to wait a couple seconds for me to come back on.
Okay. Okay. So let's dive in and start with last week, then go to the major indices, and I will address all of your questions. I'm not going to say I have all the answers, but I'll address all the questions. Let me just do one thing. Make sure I'm perfectly set up. Let's move this over. So Friday, we have the jobs report, and it was certainly a little weaker than expected. And I don't believe that's why the markets responded like the way they did. Because look at the breadth. It was, we'll call it 3-to-1 negative. It wasn't the end of the world. Trend was neutral on one. It was not this throw in the towel panic on Friday. Friday to me was all about technology. So you look at the NASDAQ was down 3% and change on Friday. That's pretty bad. Semis down 3.5%. Software down 6.5%. Internet down 7%, which I own. Utilities were up. It's kind of the same story, although clearly the tech led the way down. I wrote what I thought were two pretty good blogs last week. If you're, I got to get the light on here. I just walked in from the UConn women's game with my daughter and two friends, and I'm a little out of sorts. Let me turn the light on 1 second. Okay. There we go. Now I could see. So I wrote two blogs last week, which I thought were pretty good. I keep addressing, because we all keep talking about it. I don't think fundamentally this looks anything like 2008. I've said this for weeks, and I will say it. You could put a stake through my heart. This is not 08. But price has really followed the beginning of 08 very nicely. It's called an analog, or an analogy, sometimes people say, or a comp. So we had this perfect decline into MLK in 08 and a perfect decline in MLK this year. And then we had an 8-day rally in 08, and guess what? We had an 8-day rally this year. Word of caution, all price analogs eventually break apart. I remember there was a great one with the NASDAQ and the Nikkei in Japan that was held for years and years. And then it all of a sudden diverged and it was done. This will not follow the whole year. I feel very confident about that. After the 8-day rally in 08, we had a 3-day pullback. We kind of sawtoothed a little bit, put in our low in March, and then had a great rally into May. Okay? We'll look at that in a minute. And then I also wrote a long piece, about the two breadth volume thrusts, easy for you to say, 90% volume days, meaning 90% of the volume on a given day was in stocks going up. It happened in 91 as we launched new bull market. At 71, boom. 82, it happened at the low, boom, off to the races. 84, it happened, boom, off to the races. 87, boom, off to the races. It didn't happen for 20 years. And then in 07, it happened, and it failed. So I'll let you read it if you want. It's on investfortomorrowblog.com. All right, now let's get back to the matters at hand. So Friday was an ugly day. Going into Friday, actually I'll do it on the S&P. So here's a Dow. Stochastic all the way back to overbought. The market could definitely support a pullback here, and that would really benefit the bears. You have our internal or momentum low right here. You have your rally, your 8-day rally, and now it's sawtoothing. Friday was ugly, but on a chart we haven't done any significant damage yet. Just felt really bad on Friday. S&P a little weaker than the Dow, right? So internal low, here's your 8-day rally. 1, 2, we've had 4 days of decline now in 2016. In 08, we only had a 3-day decline. So is the analog over? Well, we're going to find out this week. So this week is put up or shut up for the 08 price analog. We're right back to testing Wednesday's low in the S&P. Coming into this week, what I said was, if you recall, bulls have the ball. If the bears are going to make any headway, it has to be early in the week. The longer the market goes where the bears don't make any headway, the more likely it is for an upside resolution to the 50-day moving average. Well, the bears came right to work early in the week, hence the tilting of the seesaw back to the bears from the bulls. Unless, and as you know, I don't believe markets really bottom on a Friday. It's unusual. So unless we're going to bottom immediately, there is a decent chance that one of the preferred scenarios would be we're going right back down to test these lows. Now, this is a little soon for me. I like more time in between testing of the low. The sooner we test, the less likely I'm confident this low is going to hold. So this week we went from the week being really important for the bears last week, and now as we head into this week, it's really important for the bulls and that 2008 price analog. Here are the mid caps, definitely stronger than the S&P. Same thing, testing that reversal day low, and we don't hold early in the week, we're going back to these lows this month. Small caps had a very bad day on Friday. Now we're down below the lows of last Wednesday. Same thing, they got to hold now. It's really important for the small caps to hold. And here are the cues, which I'd spoken about. The price chart looked better than the rest, but their relative strength rolling over just did not bode well on a relative basis. This is just a horrible, horrible, horrible week for the bulls, or an amazing, amazing, amazing week for the bears in the cues. Europe, which can't make head or tails out of right now, and I still can't. I don't have an opinion on Europe. None. Emerging markets, don't ignore this. I said it last week that they're beginning to outperform. Emerging markets are really hanging in. They're really hanging in. So let's not forget about that. And you got companies. Here's China, nothing to write home about there. Hong Kong, nothing there. Russia, hanging in. if Russia can go another 3 to 5 days with stochastics overbought and the world being weak, if it can go sideways another couple of days, this would be really bullish intermediate term for RSX. Brazil hung in nicely last week. Nothing really to do, but just point of information. All right, that's the major indices. Here's the AD line, which now looks in the short term a little stronger than the market. We shall see early this week what's going on, but it's definitely, this is a bad decline, and now the ensuing rally is a little stronger than the market. So we're getting some from expansion of breadth. Here's China. I want to pull it up because I don't know why, but beautiful reversal day in January. It never took off to the upside, Shanghai. I keep wanting to buy it. I have no real rationale, but I'm looking to buy China in the 2500s, which is roughly a 50% decline from the highs. So this is something I want to watch closely. All right. Now I'm going to address all the questions that are here. Let's go to India. Yeah, India still just not act well. Another way to slice is not act well. I mean, if we hold for a couple of days and can get moving, I can make a case that we're going to go, what, 10% higher, but I'd want some more constructive behavior down here in India. Let's see. All right, let me start reading down the questions. So, Mike, to answer your question, am I still bullish? Over the long term, absolutely. I think that we have a chance for, I'll pull the Dow up. There we go. So if we take out the August low on a close, I think you got a chance for some trapdoor selling, which I've mentioned before. You know, go down 1,000 or 1,500 or maybe even 2,000 points on the Dow, and then begin a enormous rally to all-time highs. That'd make it an easier scenario if you had a close below the low of last year, and then you had some trapdoor selling. I mean, sentiment right now is already awful. Meaning, the sentiment surveys, people are bearish. The option traders are pretty bearish. Sentiment is very supportive of a rally. If you can't get a rally going now, given where sentiment is, then in all likelihood, we're going to break last year's lows, see a trapdoor selling. It'll get messy for, I don't know, have a 2-month bottoming period, and then I think the market will go sharply, sharply higher. I don't love this setup here, given, as I mentioned, I don't love how deep this correction has gone. It's getting much, much, much sloppier. So there needs some kind of repair to be done. Repair can be done by going sideways for a longer period, or repair can be done by having some kind of trapdoor selling bout. So if we do close below the August low, and then I think we have a trapdoor period, and then I think we're going much, much, much higher for a period of years. Let's see. Are we in a bull market? So those of you who took the market timing class, you know my price confirmation of the bears owning the market has been confirmed for a while now. I would kind of call this a bear market. yet. I may be wrong. Certainly, it's certainly a bearish period. Um, it's not. There's not a comp lately that this is valid. It's not valid to '08, and it certainly is not valid to 2011. And there's nothing probably in the last, I don't know, 15 years that this period looks like. So, and we're certainly not in uncharted waters. We're kind of stuck between a bull market correction of greater than 15% probably, and something really bad. I'm not sure how I'd label it. But those of you guys from the market timing class, you can dust out your notes from that spreadsheet that I showed. This clearly continues to confirm for a while that the bears own the market over the intermediate term. Let's see. I'm scrolling through all this, so many comments. So when do I expect the correction to end? It depends. I'm sticking with that this was the internal low right here. January, what was this, January 21st, I think? And then we're going to have a retest and then a much better rally. That's what I'm sticking with. But in none of my scenarios did I believe so far that we're going to have just a quick rally, and then if the retest is now, this is not a long period of time to support a huge rally for a while. This would bother me if we retest, hold, and then begin to rally. I'd be concerned that will roll over sooner than later. If the market holds early this week, we rally and we kind of go sideways for a while and then come lower in March. If you're a bull, I feel better that way. If you're a bear, you'd like to see us just take this low out this week. Yeah, JN, I don't agree on the oil collapse will destroy the lenders. From what I understand, the banks, although on their balance sheet, can't reserve all they need to reserve for the oil losses, they all have the money set aside. But because of I don't know if it's Dodd-Frank or other banking rules, they're not allowed to over-reserve for this stuff now. But there's no secrets that you got. I mean, I've known about it for a year. $300 to $500 billion on bank balance sheet that's got to be dealt with for the oil companies. They're all not going to go bankrupt. I mean, that'd be a clear sign of a bottom when everyone's going to go bankrupt. I've said this all year. I'm looking for a high-profile bankruptcy or a couple of defaults to put a bottom in high yield, which probably means that energy bottoms. You know what's a little concerning to me regarding energy is the oil's down from 100 to 30, and the consumer, which is 70% of our economy, is not spending the savings from oil. They're actually acting fiscally responsibly by holding on to the money, paying down debt, and saving a little bit. So that's long term, it's healthy. It's just not short term. But short term, it's a concern. Let's see what else. Mike, no, Mike, I'm not sure I agree. Oil is, if oil is weak because of the economy, I don't think anybody's missing anything. Don't get tied up in that Baltic dry index. I mean, that's a crock, that index, frankly. So I'd be more concerned that if I were looking at a way to gauge the economy, simply look at FedEx and UPS. Looking at the Baltic Dry Freight Index is a load. I think it's a garbage index. But this bothers me, frankly, that both FedEx and UPS have been decimated. That to me, it's a much better economic indicator. And I know I've not said the economy is good for a long time. This to me is your typical, I've said it since 2007, post-financial crisis recovery. It sometimes teases and tantalizes on the upside, it terrorizes on the downside, but it takes 2 full recessions to recover. I don't think the economy is falling off a cliff in this country. Period. Could we? And I don't see a recession in the United States this year. I guess it's possible. It could. I think maybe the end of the year, but I think it's a 17 story. And I think with $3 trillion in cash, you'd have to have blinders on to think that our economy is in big trouble. There's $3 trillion in cash on corporate balance sheets. $3 trillion. I mean, could we have a mild recession like we saw post 9/11? Absolutely. Would most people notice? No, they wouldn't. Banks are not going to topple from oil. I think that's like a 0.5% chance. I think that there's too many structurally good things in the economy right now. Could it stagnate for a while? Absolutely. But to think we're going to shrink by 2% or more GDP, I don't think it's happening. Let's see. Burgle asked about why utility stocks are running so hard. It's not just about yield, because here's XLU, which has gone vertical. It can't be just about yield, because look what the REITs have done. Staples are hanging in. It's more of a defensive play than a yield play. Let's look at telecom lately. Hanging in. I mean, it's a way to stay invested and to play on the defensive side. How long does the earnings suffering? I mean, I think it's going to be a tough year overall for earnings. I think the comps will get better and better, obviously, as the year goes on. But I think it's going to be a tough year for earnings, and I don't think we're going to get any help anywhere. I think that's the other problem, is that I don't think the Fed's going to become accommodative soon enough, and I don't think we'll have any fiscal changes, and I think it's just going to be a tough year for earnings. Let's see. So many commenting. I'm sorry, guys. It's like Fred, isn't the consumer's reaction similar to the 1930s depression? God, no. The consumer's not even reacting like it did in 08 or 1990. Yeah, I can't figure out why everyone is so negative. I mean, someone would have to explain to me, what do you guys see that's so cataclysmic out there? Stocks are down, what, 11% from their all-time highs? I mean, the economy is slow and stodgy. It's been that way for years. What is so depressionary? I mean, just to Fred's comment, everybody's comments are so negative. I'm surprised. I mean, you have, and the layoffs that are here, there's small rounds of layoffs, and a lot of them are due to either energy or M&A activity. So I'm surprised everyone's so negative. Are banks still holding a lot of toxic assets from the crash? No, John. Either they recovered, which the vast majority of them did, they were totally written off their balance sheets, or they matured. And as we know, since '09, since probably '09, banks have not been lenders. They've been hoarding the money. Hence the $2 trillion they have on their balance sheets. Regarding Putin, I don't. Right now, I think he's just going to fly on the line he's flying on. Um, I think he'll wait out Obama. He'll be there. Obama won't be there. But I don't think they're going to have any kind of heightened military action in the Baltics. I hope not, anyway. They're kind of the lead player in Syria, which is what they want. Iran's coming back, and I think Russia's, for them, except for the price of oil, obviously, but Russia's in a good spot militarily and in the world. I don't see any. I don't think Putin's gonna fall off the wagon here. I mean, 93 million people are unemployed. I get it, Michelle. I'm not sure if that's the number. I know you quoted, but and I don't mean to minimize, but so what? We've had unemployment's been coming down, obviously with the help of the participation rate, but unemployment's been coming down since '09. So why? Yeah. So what? Why is everyone all of a sudden flicking the switch and is so bearish? And I don't agree auto loans are all subprime. I totally don't agree with that. I could be wrong. I'm not gonna. You could be right. I just don't see it. I don't see things as negatively as I guess the majority does right here. Markets keep going down. I'll tell you what, Fed ain't raising rates, and all you're seeing now is a flattening yield curve. Look what the 10-year's done. I mean, Fed come on, I can't even type. Ever since the Fed started to raise rates, so Fed began to raise rates roughly right here. 10 years at 230. Since the Fed's been raising rates, the 10 years collapsed. The yield's down to 185. Short rates going up is irrelevant on the economy. If they go up another 25 bips, so I don't agree with it. I wouldn't. I told you I don't think they should raise rates for years. But raising rates to 50 or 75 basis points is irrelevant. Right now you're seeing the yield curve flattening, which is why I still don't think you have a recession until the yield curve gets, if not flat, pretty close to it. And I look at the 2-year yield and the 10-year yield for my yield curve. So you got some ways to go before the yield curve gets flat. All right, let me forge ahead so that I'm not. And I'd love to spend the night with you, but I have to drop off my daughter at her softball practice, and then my wife and I are actually going to go out because I'm not in Vermont. All right, so let's go to the 4 key sectors, and they're all going to look the same. Here are the stocks. Okay, stochastics rolling over. Friday was an ugly day. The January lows are now in play. The trannies are trying to hang in. So if you're looking to hang your hat on something, some kind of silver lining in the cloud, they've gone from absolutely decimated. They're still decimated, but now look at Friday's action. The trannies are trying to hang in. So put the trannies on your screen if you want to look for longs. They're trying to be relative outperformance. But I'll tell you, the banks are just death. The banks had really hung their year on the Fed raising rates 3 or 4 times, which would do wonders for their profit line, net interest margins, and that's just not happening. So the banks are death. So as much as I think the trades are constructive, banks is where I look to get, if I wanted to find some shorts, I look at the banks. The consumer, discretionary. bad day on Friday in consumer discretionary, and we're right back down to the January lows. This is certainly important to watch. This looks like we're going to kiss this low Monday, Tuesday, Wednesday this week. See if it holds. And did I cover them all? What did I miss? Trannies, semis, banks, discretionary. Okay, those are the four key sectors. Only the trannies are really looking constructive if you want to grasp. Software absolutely decimated on Friday. You had horrible earnings from, I forgot who it was. Tableau's earnings. And this was the leader for years and years and years and years and years. Clearly, we changed last week. Last week was kind of the seminal week for software, and not for the good. Telecom's hanging in. Another one. So you got trannies and telecom hanging in. Constructive behavior. Not what I want to see if I'm a bull looking for a rally, but telecom is hanging in. Diversified financials look as crummy as the banks do. They should retest lower. Retail. Last week, not as bad as discretionary, but still they've been decimated and not being constructive yet. Home builders, kind of the same thing as the rest of those. Nothing to glean from that. But look what happened last week with industrials. Here's another one. The weak dollar is giving a bid to industrials. Definitely constructive behavior. And guess what? Materials too. So you got, it's not like this decline was where everything got thrown out. You got trannies, telecom, industrials, and materials all trading constructively. So as you guys seem to be really, really bearish, like the world's coming to an end, it doesn't bear out looking at the sector so far. Energy, XLE, I think it's now probably neutral. OIH, a touch stronger, but also neutral. Best thing these can do is go sideways for a couple more weeks, retest, and then have a better rally. Airlines, that looks ugly. Oil has been decimated, and the airlines cannot get a bid. That looks ugly. A lot of big red down days, looking ugly. And the internet sector just got absolutely obliterated on Friday. That was what led tech lower. So you get Amazon looked just so ugly last week, obviously based on earnings. Google on great earnings selling off. That really concerns me when a stock goes down on great earnings. Not a good sign. Reminds me of 2000. Netflix just same straight down last week, and Facebook pulling in like it should. This is the one that we closed the gap down at 98, and I'm looking for a tech long. I come to Facebook. Don't think it's done quite yet. No, I don't think it's done quite yet. Let's see. TAN, nothing there. Let's see. Healthcare, boom. No sign of a low, and biotech's the same thing. Really ugly, from leader to death. Oh, wait a minute. How's my phone ringing? So here's biotech. Put in its low this week. Big test in biotech early next week. Big test. IYR, the REITs Awful day on Friday. Awful, 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 awful. But you can add or keep consumer staples on the list of constructive sectors. So you got telecom, staples, industrials, materials, transports. 5 constructive sectors so far. And gold. Oh, the gold stocks just absolutely took off. I thought I was really smart because I nailed this low in one of my strategies, and I sold right here. So this was like a 13% move or something. And I sold feeling really good, and then I left all this on the table. Makes me want to puke. But it is what it is. Gold to metal, here it is. Again, this is not your typical behavior in gold as it's bottoming. This is not your typical behavior in gold. So I will repeat what I say for a while. It's been a nice rally. Last week we came into this week, I said gold certainly could go higher, but I'm just concerned that this is not the rally. Long term, I think gold's going to $2,500 by the end of this decade. I just don't think this is the rally where we launched the new bull market in gold. Copper. I mean, copper's bouncing back nicely right into overhead supply. I don't really have a strong opinion. You know, it blew out nicely. We came in last week with that, which argued for one more pop to the upside, and we got it. What do we do now? I have no opinion in copper. Okay. Crude oil, there it is. Doesn't look like death, but I still don't think this is going to be the all-time low. I think we got another low coming up in crude. Let's see. Let me go to questions, and then we'll go back to the ags. Did I miss anything? Oh, currencies. Oh, bonds, too. No, let me ask. Let me go to questions, then I'll do currencies, bonds, and the ags. Let's see. No, Michelle, right. I think the problem in the economy, but it's not new in the last 6 months. Living the dream, we have a middle class that's evaporating. That's the problem. But I just don't think anything has happened in the last 6 weeks or 6 days that's been any different from the last 6 years. Except that we've, as much as I can't stand Obama, I got to give him credit. The job growth came under his watch. Now, he inherited a disaster, and that all likely was going to turn anyway, but I don't think anything has changed in the last 6 weeks. Let's see. Does it look like managers are seeking refuge in large caps, JN? I wouldn't put it like that. I think that there's a long-term trend change that's going from small cap to large cap. That's what I'd say. And I think it's going to be that way for the rest of the bull market. I don't think it's 08 or 07, 09, and I don't think it's 00 to 02. Michelle, is gold manipulated? As you know, I'm not a big believer in the whole conspiracy theory on any manipulation. I mean, markets are markets. It's the same market we've had in stocks and bonds. Now, computers have a bigger impact than the globalization does, but I'm just not a big believer in the whole conspiracy manipulation theme. It sells well, and it's really interesting. I just don't. I do believe the free market eventually wins out. Gold cup and handle forming. Yeah. Possibly. It's a little early, right? Because here's your rounded bottom, but so you're assuming that you're going to have a cessation and some back-end filling. But this is just not how gold bottoms long term. So if we go back and look, I still think we have another shot down in gold. But again, I do think gold is going to see $2,500 by the end of the decade. John, great question. Why are the airlines suffering? And they shouldn't, right? What you're seeing, John, I'm flying Monday to Florida. Airlines are all sold out. We know that. And oil prices have collapsed. We know that. So American, which doesn't hedge their oil production, their oil purchasing, should be doing a lot better. Full planes, no oil's gone down. They're making money hand over fist. The fundamentals are great. Earnings are amazing in the airlines, but they're under collapse. That, to me, looks like they're caught up in this theme of a global slowdown. So that to me is why the airlines are going down. Bill, are you asking about the Zika virus? Okay. So Bill says, well, can Zika be causing the airlines to go down like this? If it was really Zika, guys, you'd see a collapse like this over here. This is a very slow, just methodical march lower. That's not what you'd see if it was Ebola related. But now that you guys asked, how did it behave up under Ebola? Here's the Ebola decline. See how the end, they just killed the airline. Every day was red, 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 down, 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 down. Today, it's kind of orderly. Up, down, up, down. I don't think it's the Zika virus. All right, let me forge ahead into fixed income. Your bottom coming in junk bonds in 2016. Probably the first half of the year. Major blow coming. Anything yet? No. I think it's coming. And they're plain vanilla bonds, nothing going on. TLT, which I still own it. I didn't buy it because I thought it was going to go up. As stupid as that sounds, I bought it because it was a quant model that said to buy it months ago. And I'm glad I own it. We sold half on this reversal day, for whatever that's worth. It is stretched. I mean, these bonds are really stretched here. Unless stocks really implode this week, I got to believe that TLT pulls back. 10-year yield, I already showed it. It looks like it wants to pull back for maybe a day or two and then head back toward 2%. Oh, currencies. Here's the dollar. Remember, this was the seminal day, my favorite word today. This is the day I said the bull market had ceased, stopped. And in all likelihood, we would trade sideways to lower for the foreseeable future. Nothing has changed. I think we're still digesting this day. We are still moving sideways to a little bit lower. I do not think this was the peak of the bull market in the dollar. It's asleep temporarily. And it's funny. Remember all the people who said, well, when the dollar goes down, it's great for stocks? Really? Well, what happened the last 3 days? You had a weaker dollar and stocks got pummeled. The euro broke out of this consolidation really nicely. I'd love to see the euro reach kind of towards 112. I think we can short it and get some staying power in this for a while. Yen, I texted Tanya during the week. In all my years, I don't ever remember this kind of move in the yen. Such dramatic moves in both directions in the yen. This move was based on the negative interest rates that the BOJ announced. Upon further inspection, there was all kinds of qualifiers for those negative rates, hence the reversal. The Canadian dollar, the loonie, had a beautiful run that seems to have ended, at least in the short term. British pound, nice run. We'll see if it's over this week. All right, let's. Oops. Okay, so let's go to wheat. Nothing. Nothing doing in wheat. Absolutely nothing. Pair of twos. Guess what? Corn, same thing. Pair of twos. Nothing going on. Triple whammy. Soybeans, same thing. Pair of twos. Nothing going on. They all look like long-term bottoms in the making, but these things, commodity bottoms last a long time. Sugar, which we've been short and negative on for a while. A nice day in sugar on Friday, but I still think it sees lower prices coming up down in here, 1,200. Cotton has been sloppy and all over the place, and it continues to be sloppy and all over the place. Nothing going on there. Cocoa, same thing. It's now trying to begin the bottoming phase. Big decline, and now we've got enormous. Look at this volatility down at the bottom in cocoa. Huge moves both directions. That should be bottoming action. Cocoa. And finally, coffee. Boring everybody to death. These are how commodities bottom. It's been a year and change. They just bore you to death. And now we should pull back to the lower end of the trading range once again in coffee. All right, let me look at any other questions. Scott, you said the bottom in the market will be put in by the end of the first quarter. Yep, and then all-time highs by August. Am I still holding on to that? I'm holding on to that now, Scott. So I said we should. What I said actually was that we should see the bottom for the whole year in the first quarter. If you want to hold my feet to the fire to be even detailed, that's what I thought when I did my forecast for the year. Will I be right? We're going to find out soon enough. One way I'll be, one of the first clues I'll be wrong will be is if this week we break the January lows and don't immediately snap back. Hedge funds, yeah, JN, the hedge funds in the last 3 weeks are betting heavily against the RMB, the Chinese currency. So I find this fascinating. George Soros broke the Bank of England in the 1990s. That was kind of the crowning moment in his illustrious career. I can't stand Soros anyway, but the question is the Bank of England like the the People's Bank of China? I mean, if I had a bet on China or England in a currency war, I'll bet on China. But I'm not sure that I want to even get involved in the RMB. You got to have some pretty good intestinal fortitude right now to play either bet in the RMB because there's such polarization. You get very few people who are neutral. They're on one side or the other. And frankly, most, as you mentioned, JN, most are betting against the RMB, against the People's Bank of China. I won't do that. I got enough wounds in the last year, last 8 months. Yeah, Mark. I mean, options are a good way to play any potentially large move, The problem is you have to make, as you know, you have to make sure that if you're on the long side and implied vol is high, you got to be right, and you got to be right quickly. So, I mean, options are not for the faint of heart, and it's not for beginners. Any other? My battery low on my phone. Oh my god, this is unreal. All right, any other questions, comments, concerns? Got anything else? Fire away. Questions, comments, disagreements. Then I'm going to go change. I junk fooded out today. I don't know why. I had a foot-long hot dog, this huge fresh baked Bavarian pretzel, and what else did I eat? What else did I junk out on at the game? Oh, God, I had a donut. Scott, definitely, I'm going to Florida Monday, Scott, and I'm working Monday, Tuesday, Wednesday, and then I'll be back Thursday morning, so no TV. Well, first of all, I have not pushed hard for TV, and second of all, when I have pushed, nobody wants to have me on right now. I feel like, can't think of an analogy. I feel like a Yankee fan looking for a ticket in Fenway. Nobody wants to help you. Mike, if my bull plan is wrong, what do I see as the opposite result? I mentioned it earlier. I think if I'm wrong, we will close below last year's low. We will immediately see trapdoor selling on the Dow of 1,500 to 2,500 points. That's what I see if I'm wrong. There'll be a short-term collapse. It won't be a crash like 87, but it'll feel like a crash. It'll be very, very swift, sharp, and down. I do not do social media. Oh, Michelle. Well, you might. So Michelle, I just hired a kid. I can say because she really is a kid. Looks like Julianne Moore's daughter. She's like 22 years old. Works. So I'm just creating a YouTube channel, and I'm sure Tiny and I will put crap on it. I just did it to get all my media stuff off my DVR and off my computer on the YouTube. But Ty and I used to do a lot more classes than we have. I think he's probably going to email me when this is over. We got to schedule a class on something. Thanks, Mark. No, I don't know. I mean, Mark, I have a small firm, and I don't pay to play. I don't have a PR firm. I do my own PR, so I can't fault the networks for going with guys who pay, $10,000, $20,000 a month for PR. Do you like TBT? For a trade this week, TBT wouldn't bother me. I'd like to see it if I own TLT, as you know. But if I had to give a shot with TBT, I'd rather give a shot a little bit lower and give it a very small stopping point. I wouldn't get crazy with it. Mike, fib levels say Dow can go to 14.7 or 13.9. Yeah, I think it will go lower, frankly. I mean, if we break this low at 15.4, I think it's got an easy 1,000 points in it to the downside. My wife's going to shoot me. We're going to leave in 5 minutes. I'm sitting here in jeans. So if we break, let's go from the 11 low for Mike. I mean, I think we'd probably go initially right to 14.3 to 13.4, but I would think we break that low and we're going to go sub 14. If we close at new lows and we don't immediately snap back, we're going to go down pretty sharply, pretty quickly. Anything else? 11.6 is probably a little far for me to believe, but certainly, sub 14, like you have 13.9 and change, I can see that. I say so cavalierly. Yes, right. That gets you back down, I think, to the October of 2011 bottom. All right. Any last call? I have 3 minutes to go. I haven't shaved in 3 days either. Now that I'm getting older, when you get those gray whiskers coming out, mixed in with the brown ones, and the bags under your eyes. All right, guys. That's all for me. Go. I've got to root hard for Peyton Manning. Go, go, go. But I do think the score will be something like 27, I don't know, 27-16, I'll say. Or 27-13 in favor of Carolina. But I'm going to root hard for Peyton Manning. All right, everybody, have a great week. Stay out of trouble, and God willing, we'll be back next Sunday night.